the economic data implying a cooling of inflationary pressures in the US economy and thus allowing traders to expect an easing of the Fed's hawkish stance. Yet last week's optimism seems to have been replaced with doubts this week. Yet early close on Monday and yesterday's public holiday may have also played its role as there was low volatility. In this report, we aim to present news that we could signal out and could affect various shares, as well as have a small comment about fundamentals surrounding the course of US stock markets. Meta is to present through Instagram its new app called Threads. The app is to be released on Thursday and is considered to be a direct competitor to the microblogging application Twitter. The release gained considerable attention recently as Twitter owner and billionaire Elon Musk announced a temporary cap on how many posts users can read on the social media platform, among other changes. We suspect that Meta may have started intensifying its efforts in the sector after Musk took over Twitter, given that his controversial and intense personality could drive some Twitter's users out. The question remains whether Threads is going to be able to compete directly with Twitter. For the time being, we know that despite there being already rival applications like Blue Sky and Mastodon, no one was able to threaten Twitter's dominance in the ad sector. On the other hand, we have to note the possible synergies that could be created through the use of Meta's Instagram and Threads applications. On another note, we would also remind our readers of Meta's direction towards a virtual environment. Hence, we suspect that Threads application may be a side project and if actually so, may not get the proper amount of attention required. In any case, the new app is to be closely watched and we expect field experts and opinion leaders to be in the epicenter of Meta share traders, magnifying loop in the coming weeks. Any positive comments may support the share price and vice versa. Amazon seems to be facing some regulating issues again. In Europe and specifically in Germany, it seems that the company is losing the case in court where it had filed an appeal against Germany's competition watchdog, the Bundesanwaltsamt, as the company was labeled market dominant. In its preliminary verdict, the court found that the German authority was right, which in turn implies that the company has violated German competition regulations. The issue may have wider repercussions for Amazon in Europe, a key market for the company, and we do not expect the final verdict of the court to materially differ from the preliminary one. Furthermore, the US seems to be planning a restriction to the access of Chinese companies in US cloud computing services, a sector at which Amazon is a key provider. The new rule could force Amazon and Microsoft to seek for government permission before providing cloud computing services that use advanced artificial intelligence chips to Chinese customers. According to Wall Street Journal, we expect both issues to weigh on Amazon's share price if magnified. The company's earnings release for the past quarter is still a way off. Hence, we may see it not playing a key role currently in regards to the company's share price. Tesla hit a new record high number of vehicles delivered as it reached sales of 466K in the second quarter. Yet it would seem that sales of rival companies such as Chinese car makers also were on the rise, at least for June, despite the issue implying a faster growth rate for Tesla. New worries about the financial performance of the company emerged. It should be noted that the record number of sales was achieved given the discounts on the price of the cars produced by Tesla. Hence, the increased sales are expected to reduce the company's profitability. However, that will be verified once the company releases its earnings report on 24th of July. For the time being, the company's share price seems to be at high levels and rising, yet should the EPS figure drop further after last quarter's drop, we may see the shares price suffering. We highlight that in the past week, all three major US stock market indexes got a boost, especially on Friday. The key reason was the slowing of the core and headline PCE price index for May, in an indication that inflation in the US economy seems to be cooling off. The release tended to intensify market expectation for a possible easing of the Fed's hawkishness and thus allowed for a more risk-oriented approach by market participants. Hence, we expect the bank's intentions to continue to substantially affect US stock markets, and we highlight the release of FOMC June meeting minutes on Wednesday. Should the document once again verify the aggressive hawkish stance of the bank, we may see US stock markets slipping, especially as they will practically be reopening after a public holiday. Yet the market worries for a possible recession in the US economy and a possible slowdown of the global economy are still present. Should the market worries grow further, we may see once again US stock markets weakening and vice versa. Also on Friday, we highlight the release of June's US employment report in the American session. The release is expected to have ripple effects also in US stock markets, and should the data show that the US employment market remain tight, resilient, thus allowing for the Fed to maintain its hawkish stance unchanged, we may see US stock markets weakening. Lastly, and on a more fundamental level, we note the visit of US Treasury Secretary Yellen to China. There seems to be an effort to improve the US-Sino relationships, or at least not allow them to deteriorate further. And should such signs be sent with Yellen's visit in China, we may see the market mood improving and allowing US equities markets to rise. Thank you for watching.